through 2011. That's an average of just once a year. We can argue about what it means for the price to be correct, but we know that with the benefit of hindsight, you'd have been better off buying or selling instead of holding all but 9 days in 9 years. It's hard to imagine that there isn't a lot of money to be made by buying or selling in circumstances like that. But there's a problem, isn't there? We don't know whether to buy or to sell. Lots of academic research shows that stock prices are almost always fair. Even market professionals with access to vast stores of data and fast computers have a tough time making a profit by picking winners and losers in the stock market, and it's next to impossible for people like us. That flies in the face of what you see on the news and commercials, doesn't it? Every day, journalists interview dozens of professional traders to get their take on how to make money by picking winners, and we see dozens of advertisements offering trading platforms and research that will give you the edge in today's markets. But you have to ask yourself, if the advertisements really could make you rich, then why aren't there lots more millionaires who made all of this easy money by trading? Wouldn't it make more sense for the people selling these trading secrets to keep the secret of their success just that, a secret? Keep in mind the main insight of the classic book, Where Are the Customer's Yachts? By Fred Schwed, Jr. The book's most memorable anecdote is probably over 100 years old. A visitor to New York was admiring the bankers' and brokers' yachts in the harbor. She asked where the customers kept their yachts. You can guess the punchline, can't you? The customers have no yachts. I'm not going to tell you that prices are always fair. That statement is a red flag for some people. If I say that prices are always fair, then I end up in a discussion that misses the point. The point is that prices are almost always close enough to fair so that people like us are better off treating them as if they really are fair. Remember, traders collectively can only break even by picking winners and losers. If you pick a winner and buy my shares at a few cents less than they're worth, then you win and I lose. But between the two of us, we're even. And we pay transactions costs, including our time, to make the trade. That means that collectively, we actually lost by making this trade. Active traders are gambling that they'll be on the winning side. If you want to be an active trader, then you need to understand that the competition is ferocious and heavily armed too. It's one thing to invest in the market because the odds are in your favor. Do you really want to gamble on beating the market when the odds are against you? I think you're better off with a different strategy, one that lets you take advantage of what you can do. Some people hesitate to get into the market at all. They've heard or read about the market's extreme ups and downs and worry about losing their shirts in a big crash. That's understandable. Crashes do sometimes happen. But think for a moment about another industry that isn't so different, the airline business. It has its crashes too, but that doesn't stop most people from flying, does it? Now think about the news you see about the airline business. You don't hear about all the planes that take off and land safely. You only hear about the thankfully rare, shocking, and disturbing events, the crashes. Only the bad stuff is news. It's the same with the stock market. You don't see the billions of stock trades that proceed normally. Except on financial networks, you don't hear very much about the routine stock market returns that happen almost all of the time. The media reports the up a little, down a little returns, but disasters and scandals are what get airtime. That isn't new. Back in 1901, a cover of the American satirical magazine Puck featured a drawing of a gullible, trusting gentleman being sucked into a whirlpool of Wall Street speculation. Faced with over a century of that kind of bad publicity, it's not really surprising that many people think that the stock market is nothing more than a casino. The stock market is indeed risky, but probably not as risky as you think. More important, and unlike a casino, we'll see that the risk you take by investing in stocks carries not just the chance of a profit, but even the expectation of a profit.